a bloody manipulation may be brewing on the Ethereum chart. This week will quite literally be decisive, and the charts are telling us so. In this review, I'll share my personal secrets, how I analyze the market and what usually stays off camera, new ideas, and of course, entry points. Altcoin ETFs could be approved in the very near future. Welcome to the daily review of the cryptocurrency market and Bitcoin. Today is October 28th. In yesterday's daily review, we highlighted several risk factors on the crypto market and the Bitcoin chart. I urged you, both in the video and in our completely free Telegram, to refrain from opening new long positions. Today, the crypto market is red, and I truly hope I manage to keep at least some of you safe. My advice, friends, subscribe to this channel right now. I post daily crypto market reviews here where I spotlight great opportunities and, of course, warn about risks. And be sure to join our absolutely free Telegram. Only the most important, useful info lives there, plus real-time market updates, setups, ideas, and entries. We're almost at 70,000 members. Today's review will be unusual. You won't just get ideas and ready-made entries, you'll get knowledge, experience, and pattern recognition. To show you as clearly as possible the current level of uncertainty in the crypto market and the danger of the present setup, you first need to understand how I prepare for these daily reviews and how I read charts. Every morning before filming, I study the charts. Really, I'm hunting for clues. Here's a vivid recent example. Before the October 10th dump, the very day altcoins were wiped out, we couldn't know for sure that exact scenario would happen. We weren't 100% certain a correction was coming, but we were as prepared as possible and didn't rush into fresh longs or spot buys before the crash because we spotted three clues, three critical puzzle pieces. First, the monthly Bitcoin dominance chart. If you look at how dominance rolled over into alt season in the last bull cycle, first there was a strong initial downward impulse in dominance. Only after a corrective move back up into that impulse, printing a second top where most people got hurt, did true. Sustained downside begin. We identified that, in theory, those risks existed. Several days before the manipulation, I warned you to avoid cross-margin, avoid using spot as margin collateral, avoid loans, and avoid over-risking. You can read that post in our Telegram history. Second, we noticed unusual behavior in BNB. Back then, BNB was one of the strongest large-cap assets, and its move resembled a parabola. Moves at that angle can't persist long, so we already factored in the risk of a flush and correction in BNB. Could you imagine a deep correction in the strongest large cap while altcoins were ripping higher? I couldn't either, until it happened. Third, XRP. It had been hovering at the 2-70 support for a very long time, tagging it many times. Each tag weakened the level and raised the risk of a breakdown, clear sign of weakness. And beneath that support, practically a void down to 240. All those pieces clicked at once. Despite the broader market already having corrected, and while most traders were piling into new longs and spot dip buys, we chose to stand aside. You know what happened next. We even managed to buy some positions near zero. That's my approach in a nutshell. Now let's look at what the charts are telling us today and draw conclusions together. Bitcoin has been correcting since the morning. Note that price never ran the nearest very juicy pocket of liquidity at 117 to 118K. It didn't even test that resistance zone and is already turning down. It may be aiming for the lower CME gap, the price gap on the Chicago Mercantile Exchange, which would be closed if BTC falls to about $110,700. As long as that gap remains open, the market leaves itself room for a dirty trick. You must factor this in and control risk. There is a positive angle, though. The fact BTC didn't take that juicy liquidity above before correcting strongly suggests it will try to assault that resistance again. That increases the odds of a favorable resolution. Why does this work? The liquidity above is the stops and liquidations of short sellers who've been bearish and disbelieving the move. Big players know exactly where those stops sit. The goal isn't to make them lose per se, force short covers or market buys that push price up. During the current pullback, smart money can accumulate longs and pack even more short liquidity overhead, so that later when price returns there, those forced buys help fill huge long positions. So the setup on BTC is mixed. The gap below is still open and the local correction can continue, but the 118K liquidity remains unrun. And even before a real reversal down, it's technically and smart money-wise preferable to sweep those highs first. On Ethereum, we see the same triangle ETH was stuck in for a while. Price impulsively broke above the descending dynamic resistance, the triangle's upper boundary, and all the short liquidity that had built up there got swept. Emotionally, we hamsters love a breakout. Logically, from a smart money view, shorts got shaved, and often the first breakout of a triangle is a fake. The current ETH pullback does not rule out a move to take the triangle's lows and the liquidity below $3,700. It's logical. First they ran the shorts, next they can go for the longs. If you doubt that, remember the very recent scenario we traded, a nearly identical triangle where we expected a fake breakdown under $4,000 and placed bids at $3,900 to $3,800. ETH faked us out by breaking up first to $4,250. We felt FOMO, but we built a short, betting that it would then run the long liquidity, and that the first break would prove false. You remember what happened. We later got price under $4,000 and caught a sweet long. Today, analogous ETH entries in case of a similar trap are at $3,615 and $3,550s, below that $3,700 level which held price for so long. So it's rational to watch EIS from the sidelines and not rush. Look for a new long only when you have a clear edge, i.e., shorts already flushed, done, and if longs get wiped too, that's the spot. I can't be 90 to 100% sure ETH will drop there, but we must be prepared by default. First, because we literally saw this playbook recently. Second, news can betray us. This week we've got tariff talks and the FOMC. There's also an interesting on-chain tidbit. One Ethereum ecosystem company that had been stockpiling ETH in its treasury sold 10% of its holdings, likely to cover operating expenses. What happens if ETH drops to our levels? This market can flip in a heartbeat. Be maximally careful and stick to the plan. Let's open BNB. Maybe it's a spoiler for the broader market. The chart is super short biased. Price keeps taking local highs, running shorts and stops, while piling up a huge pool of liquidity beneath and barely interacting with long side liquidity. From experience, price can dump into that lower liquidity with or without a reason. Don't forget, BNB never dipped under the big psychological $1,000 level on the last correction. There's a lot of liquidity waiting there. In short, there's plenty of heads to shave. The $9 to $53 entry still looks reasonable. If BNB, a strong large cap, springs the trap, what could that mean for mid-small caps if ETH and BNB both run long side stops? Food for thought. Important balance. ETH USD weekly looks mega bullish. For that to remain intact, either this manipulation shouldn't happen, or if it does, we need a very fast recovery by the weekly close. And as you know, the entire week is loaded with high-impact headlines, i.e. risk. Alts are even trickier. I was about to suggest trading some Binance ecosystem alts because they decoupled from BTC, ETH, and looked good. Then the machine yanked liquidity and many immediately dropped 20-30%. Wild West market. That said, if you check LTC, BTC on the 4H6H, price is compressing under a clear resistance, and often that leads to an upside break. That implies LTC USD could outperform. At least it suggests LTC may be stronger than BTC in the short term. Expect headlines to explain it after the fact. Reminder, since the correction, Litecoin and Bitcoin Cash have been our main portfolio focus. All their weekly, monthly charts look super bullish. BCH has nearly retraced the entire October 10th dump, and LTC is showing strong behavior too. If the market corrects further, these alt ideas remain valid. The bullish potential is there, the charts say so, but there's a catch that makes things even messier. alts are moving out of sync. For example, ERFE is already near its prior low where stops lick pool sit. A squeeze to 0.880182 could trigger a long reaction and a neat bounce back into the blue zone. Meanwhile, Doge is far above its comparable low. Similar to ETH, it ran liquidity above the triangle's top and is now back inside. Zones of interest remain 0.172 and 0.166. It's a big project, unlikely to dump totally against the entire market. Honestly, what I'd love to see is that ETH, BNB, and Doge don't give us entries, because when they do, it usually means pain first. Look at XPL, Plasma. It fell yesterday against the whole market and stopped right before the prior low, exactly where the best bounce liquidity sits. To me, that hints the market could create circumstances to run that liquidity. So on XPL, the green zone is the long entry area. The blue is for bounce take profit. Longs are dangerous. But shorting while every YouTuber is short and burying crypto? Also not ideal. The market is trying to drive us mad and take our money. Put yourself in my shoes. I speak daily, care about my audience, and want the best results. Based on these charts, what would you say? So here's my plan.